Hello students, I welcome you all to this new week. As you know, this is our ninth week. This is our ninth week. And this week we'll be looking at the topic that says branch account. We'll be treating branch account. Alright. It's expected that by the end of the lesson that you, the student, should be able to do the following. Number one, you should be able to define branch. Define branch. Secondly, you should be able to spot the importance of branch account. The importance of branch account. Thirdly, you should be able to identify the pricing methods in branch account. The pricing methods in branch account. Number four, we have differentiate between departmental and branch account. Differentiate between departmental and branch accounts. Then the last but not the least, prepare branch account. Alright. Over here we have branch. A branch can be defined as a small part of the business operating with some degree of independence. A branch is a part of a business that operates with some degree of independence. A branch can be in Onitsha, where the business head office is in Lagos. Now, the branches will take in rules and regulations given by the head office, though not all. The head office will be in control of some of the things they do, some of the decisions will be taken by the head office, but not all. Alright. Here we have the importance of branch accounts. The importance of branch account. Number one, we have it enables the organization to determine the branch that is making either profit or loss. It helps the business to know which of the branch is bringing in money into the business or which of them is losing money. Secondly, it also assists the organization to determine the performance of a branch manager. It assists the organization in determining the performance of a branch manager, to know which manager is doing very well. You know, some of them normally give award to the best manager of the year. So with this, they can be able to ascertain which of the manager is really working hard. The next one is it prevents wastage and fraud from the staff, because when they have a close watch, when you split your your business into branches, it will help you to have managers everywhere, people looking at the staff, and so on and so forth. There will be a reduction in fraud and wastage. Now it helps to determine the performance of the organization as a whole. That because everybody will be working hard in order to be the best branch for the year. Alright, it allows proper control over the branch by the head office. It allows proper control over the branch by the head office. When you know that the head office is keeping your account, the head office gives you order, you have to calm down and obey and do the right thing. Alright. Here we have the differences between the branch and departmental account. Differences between the branch and the departmental account. Number one, we have branches are separated from the main organization. Branches are separated. Example of this is ShopRite. We have ShopRite in Enugu, we have ShopRite in Lagos, we have in Owerri, we have in Anambra. I think we all have in there. We have in Port Harcourt, we have in many states. So the branches can be located at different states, sometimes different local government, depending on what you want as a businessman. All right. Now for department, they are attached with the main organization under a single roof. I always tell you that. I think I've said something like departments are under branches. They are under branch, because when you come to a branch, you see that there, but in there you will get department. In that department, you see they have this side is for ladies' clothes, this side is for baby shoes, this side is for makeup and cosmetics. Do you understand? So that is what we mean by department. All right, the next one, allocation of branches common expenses does not arise. No, they don't allocate common expenses, like telling branch in Enugu, you will pay for the rent. No, definitely you pay for your rent. Once you are the person taking care of that branch, you pay for your rent, take care of all your expenses. But for department allocation of departmental common expenses is a very tough job, very tough, because I told us about sometimes in departments they want to share their rent. They will start telling you, ladies wear please, if you're going to pay one third because you're occupying the space, the floor space you're occupying is one third, pay one sixth because the floor space you're occupying is one sixth. Sometimes they will share some expenses equally. Sometimes they will say no, we can't share this one equally because these people are occupying more and they are gaining more. Exactly. All right. Now we have pricing methods. We have three methods of pricing. One method we have at cost price. At cost price is the price by which you paid for the goods from the supplier. At cost plus a percentage, that is the price you paid to the supplier plus a little percentage. Now the next one is at selling price. At selling price. So over here we have illustration that will help us to understand what we have been saying. We have illustration that will help us understand. Here I have a question. I have Suzuki Enterprises operate a head office in Lagos and in Ibadan. Lagos and in Ibadan. Alright. All goods are purchased by the head office and sent to Ibadan at cost plus 25%. Remember I said that uh, that some branches can be under the same state. Yes, just like we have Fine Brothers, we have the one at Holy Ghost, we have the one at Enugu Shopping Mall, Polo Mall. Yes, we have the one at Polo Mall. I think they equally have other places. Now let's talk about Rovan. You still remember Rovan stores? Rovan store we have the one at Transekulu. We have the one at Albany Road. We have the one at towards we're going to New Haven towards that area. Exactly. I have the one at Albany, still the same states, but they are different branches. Is that clear? Alright, here let's focus on our question. The question said all goods are purchased by the head office and sent to Ibadan at cost plus 25%. The following information were for the year ended 31st December 1996. Goods sent to branch, sales and credit, returns to head office at cost, cash takings remitted to head office, stock at close at cost price, cash taking stolen, sundry expenses. Okay, let's go down to you are required to prepare branch accounts in the head office books, including the necessary accounts. Then the profit and loss account for the year ended 1996. The system of accounting the head office uses is memorandum column method. This memorandum column method is the same thing with double column method. All right. Here I have my workings here. I always do my workings, and I will advise you to always do your own this way. Get a rough book, get your figures before you start working on your table. The first working I did was to get the selling price of goods sent to branch. The goods was sent at cost price, and I was told to add 25% to it. So I need to get the selling price. How do I get the selling price? Cost price plus the percentage that was added. So for me to get profit, remember when we did markup and margin, I have markup times cost price, markup multiply cost price. All right, I have 25% is the markup given to 25 over 100. 100 is because of the percentage times 50,000 equals to 12,500. Please get your calculator and solve your own. My calculator gave me this. Make sure your calculator is giving you the same figure. All right, now for the selling price, we have say selling price is gotten by cost price plus profit. So 50,000, which is the cost price, plus profit that we just got, which is 12,500, is give us 62,500. Are you following? Now to the next one, I have now the next one I have the selling price of returns to head office. What was returned? Markup times cost price. So 25% over 100 times 500. That was the amount that the question gave us, equals to 125. So for us to get the selling price of the goods returned to the head office, so 500 plus 125 that we just got now equals to 625. Now remember I told us why goods can be returned. Maybe they have damages, you don't need them. You notice that that was not what you ordered for, that was not what we ordered, and so on. We have many reasons why we can return goods to the supplier or to the head office. All right, the next one we have selling price of stock at close. Stock at close, the remaining stock at the end of the year. The branches, they don't keep them; they have to return them to the head office so that they will do proper accounts. Is that clear? All right. So for us to get this, we have markup times cost price, 25 over 100 times 12,500 equals to 3,000 3,125. So 12,005 plus 3,125 equals to 15,625. 16,625. Then the next one is selling price of goods stolen. Some goods were stolen. Goods on goods stolen on transit. Some fell off from the vehicle while coming down, maybe from Ibadan, from Lagos to Ibadan. Some will be stolen. Some will just fall, and the driver will not see it, and they'll count it as stolen or lost. So say markup times cost price 25 over 100 times 40 equals to 10. So for the selling price of goods to have 40 plus 10. Alright, now let's move on. This is a memorandum account that we're talking about. Double column 1, 2. Remember how we used to do our double column? 1, 2, invoice price, cost price, invoice price, cost price. Now, this is the memorandum account. Goods sent to branch was what? The invoice price was 50. The invoice price is 62,500 because we've added the profit. You're going to add it. I added the profit. So the selling price is what we're adding. Do you understand? Now this was the cost when they brought it. 50,000. Now let's go to return to head office. This was what we returned. Invoice price is 625, but normal price initially was 500. Credit sales 35,000, 35,000. This is our sales. Cash remitted to headquarter. Cash taken back. We sold this one on credit. We remitted this cash 10,000 naira. Cash taken, stolen. Some money was equally stolen, just like some of our goods were stolen. All right, 115 naira. Now we have sundry expenses. Some of our expenses 950. Goods stolen, you have to record it. If not, you pay for it. Is worth 15 naira for invoice and 14 naira for the cost price. Allowance of selling price. Allowance was given to some people, 100 naira. Stock at closing stock. The cost price was 12,005, but added the percentage, and we got 15,625. So for us to balance this account, or the total will add up this side, you guess it's 2,500. Now for us to get a balance the column of the cost price, you see that this place is not the same thing with here. So we now get this side minus 50 will give us 9,140. Call it gross profit. 550 total is 59,149. I hope you remember how we normally balance account. Add up the two sides, find the bigger one, remove the smaller one from the bigger one. Whatever you get is your gross profit. All right, let's continue. After the gross profit account, we're equally asked to do other things, which is they said the necessary account. This is the necessary account. The goods sent to branch account, return to head office 500, transfer to head office trading account 49,500. Now the head office, they are the ones keeping this account. Do you understand? Now branch stock account 50,000 naira. So they are writing just the ones we return to them, and then the transfer, the amount they are transferring to the branch trading account. Is that clear? In this case, the branch is not keeping this account. Now these are profit and loss. In profit and loss, they are writing all the expenses, what you lost. Sundry expenses is 950. Cash stolen, this money is not coming back. It's supposed to be added to your profit, so to your expenses. Sorry, 115 naira. Now goods stolen at cost 14 naira. Then gross profit was 9,140. Then 9,140 minus 950, 150, 40 give us 8,000. So the net profit is 8,000. So this year, this Suzuki Enterprises made a profit of 8,000 naira from the branch in Ibadan. Hope you understand. Please remember to go through this very well and then do the assignment attached. Thank you very much and have and have a very nice week ahead. Thank you.